What's up, everybody? It is Michael with Daily Stock Fix, finally with another video. I know you guys missed my hour-long videos. It's a joke. I really hope this is not going to be another hour, but I try to fit in as much great content into my videos, and here we'll discuss a couple of things, right? I already have the questions laid out, so I'm not going to just go on a straight-up ramble. It'll be a little bit more constructed. Um, and if you have any questions, of course, please message me. I will definitely answer any of your questions if that you give me on Instagram or email or anything like that. Just have the courage to send me a message. I do want to make these videos for you guys. Um, and if you guys, if I'm doing something wrong, you want to, blast me, you want me to blast myself on one of these DVDs, cool. I'll do that too. All right, so we're going to talk about a little bit about myself, my stock knowledge history. Uh, so when did I start? I started back in 2015, around August. I've been learning back when I started. This was right before AQXP. I don't know if you guys remember it. It was a huge runner from. Let's see if I can go to it actually. All right, there it is. So it was this runner here. So it was back around here. I was it should have been right around July time. Yeah, right around July time is when I started. So right now I'm marking just around the anniversary for my second year anniversary. Oh no, is this third year? Is this third year? I can't math right now. Yeah, it's the second year. So it's just about 2 years now that I've been doing this. Um, and I haven't always been with Tim Sykes. Right now, I'm not signed up to any of the Tim Sykes products. That includes stocks to trade, any of his Tim Alerts, Tim Silver, or even the Millionaire Challenge. So I don't use any of that. Was I before? Yes, I was never in the Millionaire Challenge, just because I never had a um, financial background in which I can basically just toss $5,000 into into how to make into the Millionaire Challenge. And from what I hear, that's how much it costed back then. I can't imagine how much it costs now because now there's a higher demand as Tim Sykes has more students. But I was in in Tim Alerts first, and then I went to the Silver plan, right? And I got Silver to try to see if I can watch the videos, those 4,000 videos that he has, going to 5,000 now. And I never did, and that was a mistake. I paid $1,000 for the year subscription, and I never fucking used it. So, you live, you learn. Definitely would have enjoyed watching those now. But I was I was 22 years old, not really dedicated, kind of like testing the waters out. Um, and and now I'm just not part of it because I feel like I'm pretty much self-sufficient in terms of my strategies and what I do. And if I have, and I really put time into studying all these patterns in terms of Excel sheets and all that stuff, so I can understand it better. Like the proper way for you to be trading is for you to become self-sufficient. Um, and that's what I intend to do, and I think I'm pretty much there. I still make my mistakes, as you guys can see. I mean, I'm pretty transparent on my Instagram account, and I give you the executions. It's not like I'm saying in hindsight I'd be like, oh yeah, after the trade that happened, I tell you, oh, I bought this and I sold this. No, that does happen in some of the trades, but you can see also in other trades I post exactly when I buy and I post exactly when I sell on the instant that it happens. And I take my losses. I take my losses. Sometimes I have bad weeks. So that's pretty much my history. Um, I want to go more in depth with stocks and trades and other brokerages and stuff like that. What brokerages have I used? First of all, I've used Thinkorswim. I've used Robinhood, E-Trade, IB, Centerpoint, um, Speed Trader. I've used a lot of them. I haven't used them all. I've never used SureTrader because I'm not gonna put my money into an offshore broker that isn't regulated by the United States. I trust the United States in terms of that regard. Um, but right now I am in E-Trade, Centerpoint, and Interactive Brokers. I do not use TD Ameritrade as my broker. Every now and then I'll toss in some funds so I can teach somebody, showing them, hey, look, this is how you go an account, even on this broker, but I don't keep my money here at all. So if you guys want to go to this freaking account number and like and do some crazy stuff, good luck. There's no money in here. So I don't care. So do I use stocks to trade as a trader? No, I do not. Now, why don't I use it? My style is very, I wouldn't say unique, because I'm sure there's people out there that have the same thing. But I don't have the necessity for stocks to trade. Now, there's all that marketing that says, like, if you're missing out on the tools, you're not going to do well. That's true, and is also false. That's true in terms of, yes, stocks to trade can save you time, but my strategy already doesn't require that much time. I'm actually using more time to record my trades and record strategies. But in terms of finding news and all this stuff, I'm probably going to save like 5 minutes every day, 5-10 minutes every day. I've just become so efficient at looking at the news and understanding the patterns that I don't think I need stocks to trade. Stocks to trade would be good for someone that's trying to buy it, like the first day. Like, imagine if you saw this guy, right here. If I can zoom in. If you're looking at something like this, the first spike day, of course you don't need stocks to trade to know this. Maybe you need it for the for the earnings report, but realistically all you have to do, like for example what I do, this is why I tell you I don't need that stuff. I go to pre-market, I do this, quickly look at all the stocks moving. I can quickly type it in, and after I type it in, I look at it, quickly hit the news, right? Hit live news, read it, understand what the headline is saying. Maybe if I think that the company's a shit company based on how the stock has acted previously, or if it looks like promotion, I would look at the SEC filings. It's all a process now, right? Stocks to trade, I think, will definitely help make it more efficient. But do I need it? No, right? I'm already comfortable with the software. I've been doing this for a year. I've been using the software for as long as I've been trading. So I don't think I need that. All I have to do is put in the work that Tim Sykes did previously, which he didn't always have stocks to trade. He used E-Trade and he used Yahoo Finance. And although I don't use every single website that he uses, I've refined my process in a way that fits me. Now, if you guys want to go ahead and pay for stocks to trade, that's entirely up to you. But my opinion, I just don't need that. I've refined mine enough to fit my personality. And not only that, stocks to trade does not have a mobile platform. And being able to have a mobile platform is huge for me. I'm currently an active duty service member, United States Marine Corps. And having the luxury to sit in front of a computer on a daily basis does not exist. Right? I can't be a trader full time. So Thinkorswim gives me those tools where I can have this chart here, like when I come back home to review all the stocks that have moved, and also draw lines and be an artist and stuff. But it does, and it has a mobile platform that is very, very nice. It is better than any other except IB. IB is pretty nice, except it looks crappy. It has better than any other mobile platform. E-Trade doesn't come close because E-Trade doesn't have the nice charts. It's laggy. It's not refined in a way that would fit the way I trade. And that's a big sell point. If stocks to trade came out with a mobile platform, yes, then I would start paying for it. But being able to be mobile is a huge reason why I don't use stocks to trade. I'm not going to just have stocks to trade only for me to come home, and then I can use stocks to trade. That's dumb, because the whole purpose of stocks to trade is being able to find things before they really go hot. And that's another thing about my strategy. Let's see if I'm missing anything. Yeah. So I am very lazy, very lazy in terms of a trader. And although you guys can say you're never going to be successful because you're a lazy trader. There's yes and no. I'm not lazy in terms of doing my research. I'm not lazy in terms of analyzing strategies and patterns in different market environments. I'm lazy in terms of trying to buy the first day runner. So let's go to current stocks, right? Let's see. So this is a good example here. So RLOG right now. Okay, this is a big green day. It went from 20s to the 60s. It's up 60%. Would I buy this first green day because it has, you know, pretty much record volume aside from this day over here? No. And that's just because that's how my strategy works. I do not buy the front side of the move. The reason why is because, say, if you're trying to buy the first green day, it broke past the 13-day moving average, and now it's going to probably have the secondary spike. And let's actually look at it. So right now it's gapping up a little bit, right? Do I want to buy that? No, I don't, because I don't want to buy the first green day, because I've seen many times where after the first green day there's a red day, and I don't want to be stuck in that. And also I don't have enough information just based off the first red day, and I'll go into that right now with YUMA. This is a stock that I traded the other day. So if we look at YUMA, you can see that once again we have this ugly downtrending chart, right? Ugly downtrending chart, and we have that record volume, which I believe was, yeah, record volume. We go to the 3-year chart, record volume, which I like. I love to see record volume. Tim Sykes doesn't like this too much because a lot of fake outs, but you also have to look at the float and stuff like that, and past performance in terms of spiking. So if we go back to this day, actually we'll just do this. You can see record volume, broke that 13 EMA, you know, has a huge spike. It went from 80s to 240s. That is like a, was that 100%? Yeah, that's over 100% in one day. And then the second day it had a red day. That's one of the examples of why I don't buy the first red day. You know, if it had a second green day, I still wouldn't buy it, because then it's going on to the third green day, and the third green day likely has it's huge odds are for it going red on the third green day. And if it's not on the third green day, the fourth green day. Basically, I'm not going to chase the stock at all. I would only chase the stock. Say I saw earnings report, right, and it had a huge spike right here. Then I'd try to buy in the first pullback or afternoon high of day breakout or something like that. Or if it's holding support midday, that's the only time I'd buy. I would not just chase randomly and expect it to go green on the next day. I'd probably sell before the market closed. If it's an earnings winner, then sure, you know, earnings winners tend to have legs, so I would buy the earnings and hope for that. But that doesn't happen all the time. So that's just why I don't really worry about it. And you can see this one here, at the first green day, then a red day, and then have a green day here. And yes, don't be fooled by this candle here. This candle here closed here, and then it gapped up here, right? So it gapped up that much, and then it went down. It's still green day. And if you guys have seen my previous videos, you know that I love buying the first green day. Did I buy this first green day? No, I didn't, because the overall chart was atrocious, and it didn't really move the way I want first green days to move, right? I want them to break above the previous open, but sure enough, you know, this thing is first green day, and you can see the next green day, it spiked very nicely, and then we have this breakout. Okay, so once again, I don't like buying the first green day or the front side of the move because I'm lazy. I'm lazy that I don't want to feel like I'm rushed in terms of beating the crowd. I don't like that feeling, because it leaves the possibility of chasing stocks. And if there's anything I've learned in the last 2 years that I've traded, chasing stocks have amounted for most of my losses, because when you chase stocks, that's all emotion, and you should not be trading with emotion. Trade your mind, not your heart. So how much money should you start with? Like, say, when I started off with $750. And I would never recommend that to anybody. If you want to start trading, you know, unless you're going to use Robinhood, which I did use when I first started, and I still don't recommend it to people. At least now it's a little bit better. They have margin, so you can you can trade it while getting credited money back, so you can reuse it. Back when I started, it was on Robinhood, which is not the best broker. It was on Robinhood, and it was a cash account. Cash account means that whatever money you trade with, you cannot use it until T plus 3. So that means on the trading day, say you have a $700 account, or let's just make it easy, $1,000 account that you want to start with, right? You decide to use $600 of that $1,000 account. You have to wait for that end of the day plus 3 more days for you to be able to reuse those funds of $600, which means you will only have $400 to use for the rest of the time until those funds recirculate into your account. That's not ideal, right? But when I started, the market was crazy. We had that huge bull market, so I was able to increase my account size a lot. And I'm very thankful for that bull market. Am I telling you I'm an expert? Have I gone through a bear market? No, I haven't. But I know bull markets very well from these last 2 years. And so far, it's still working. It's not as great now because this market's pretty much consolidating. But if there's ever a bear market, especially this upcoming few months with the October, tax law selling and also the Hollywood effect and then January effect, I'm excited for that. And that's when I'm really good at trading. So if you only want to wait for that time to trade, and you're good at it, wait for them. If that's part of your strategy, use a strategy. If you're going to trade during summer, like right now, which I'm not trading as much, which is why I'm slow, then, identify what works for you. But I don't recommend you trade anything under $1,500. Now let me explain why. Actually, let me bring the calculator. Okay, so that's too much. So let's say you have $1,000, right? You need to give yourself the opportunity to be successful in this game. And with commissions coming in play, if someone I know Tim Sykes preaches commissions don't matter at the end of the day. I'm going to reemphasize what he's trying to tell you. Commissions do matter, but only to a certain extent. If he also tells people okay, if you're going to start trading, this is how much you start trading with, and he recommends $2,000. But say you don't have that, you're broke as I was because you're a Lance Corporal in the United States military and you don't get paid well. So you can only cough up $500 or $1,000 because you're just not financially savvy, or you don't have you didn't grow up with the silver spoon fed to your mouth. So say you have $1,000 and you are on E-Trade, right? E-Trade, the recommended broker from Timothy Sykes. E-Trade commissions are $5 in, $5 out if you make 30 trades or more per quarter, I believe. Yeah, it's per quarter. So say you make a gain. Say you made 10% off $600, right? Pretty good gain. You made 60 bucks, right? Let's go back. So you made 60 bucks. You're at 1,060. But you have to minus commissions. With commissions, $5 in, $5 out, you lost $10. So now your account size is only up $50, okay? So you have a good trade, so let's go on to the next trade. Next trade, say you make another nice gain. Say it was not such a great position, so you don't go in with $600. You only go in, say $300, $400. Let's do $400. So out of $400, you make a 5% gain. That's a $20 profit. So you made $20. Awesome. Good on you, right? $20, and now you're at $10.70. But you have to minus commissions, $10. Back down to $10.60. So you didn't really make much of a difference, right? Now, that's with 2 gains, okay? 2 gains, and that's you sizing in appropriately, because I don't recommend you ever go all in into any trade. I would only go at most 80%. So you have 1060, right? The next trade, it doesn't go so well. Say it was an okay trade, it's kind of middle range, so you went $500 in, okay? So you went $500 in and you lost 5%. You lost $25, okay? So now minus 25. Cool. So now you're back down to 1035. Then you have to minus another $10 for commissions. Now you're at 1025. Okay, so if you don't already understand the picture here, you're going to be chopping all over the place with these commissions with a $1,000 account. It is not a good way to start because you'll get frustrated and you're not giving yourself the opportunity to be successful in this game. If you have a $2,000 account, which is what I recommend, then you say let's just find out what commissions is, right? Commissions at this point, say $10, so we'll go $10 divided by 2,000. You're talking about a half of 1%. Are you going to be worried about a half of 1% when you're trading? No, you're aiming for those 7%, 10%, right? So $2,000 more ideal. $2,500 now, you really don't have to worry about crap, because you have to think about it like this. With a $2,000 account, say you go halfway in, right? So halfway, you trade with $1,000. You make 10% off of $1,000. You made $100, right? Well, you made $100. So we're gonna add 100. You're at $2,100 minus 10. You made 90 bucks, right? That's pretty good. Say you lose. You cut your losses quickly. You lost $20 just off of the position itself, and then you lost another $10. You're still up 60 bucks. So now you have a lot more breathing room when you're trading with a bigger account. I'm not telling you, start off with a $25,000 account, because then you're aiming to lose a big portion of that. 10% loss is a big portion of that account. So this is something you have to keep in mind. Don't start with an account that is tiny, tiny, small. You have to consider commissions. And what Tim Sykes says when, commissions doesn't matter at the end of the day, yes, it's true. What he means, I'll give you a good example. Steven Johnson stocks, right? If you guys follow him, I'm sure you guys follow him if you're watching this, and if you're a Tim Sykes follower. Steven Johnson stocks first started it with a ridiculously small account. I think he was trading with like 400 bucks or something. And commissions were literally eating up his account, but he did not care for a certain time, because what he was doing was he was trying to refine his strategy. And over time, he saw, okay, well, I'm having winning trades, but I'm still losing, and I'm going negative on the week because of commissions. And he pretty much did the math, and after that, he realized, hey, if I didn't have to worry about commissions, in theory, I shouldn't have bad weeks. He should not go negative on that week. So he sized up, and now he's becoming profitable. And this was in the last 3 months, I believe, is when he started doing this. So, kudos on him for realizing that. And that's what I'm telling you. That's why you need to have Excel sheets and all that stuff. But that's what Tim Sykes means. It does not mean, don't worry about commissions when you're thinking about the overall journey of your accounts, because commissions won't mean anything. If you have a $500 loss over a course of 3 years, or a $1,000 loss, or $2,000 loss, that does not matter. You have to realize I've been doing this for 2 years. The first 11 months, I was not profitable at all. I made no money. That was more like 10 months, but I made nothing, right? In terms of, yes, I'd make good plays, but I would lose over and over. I would probably have one, two good trades in a week, and 4 losses, right? And my chart was downtrending. And my profits were terrible. Commissions were eating me up. It was not a good place to be in. So you need to realize that the overall course of this journey is so much more than you perceive it if you're a beginner, because commissions don't mean anything. Think about it like the tuition for your education for this journey, right? That's what it is. It's really your tuition. And those DVDs also are your books. It's your stipend. Like you have to have a stipend, and that's gonna be everything that you're gonna pay for. And the possibilities of you becoming successful here, you could be getting paid more than a doctor, right? You could be, if you're earning $30,000, $40,000 a month in in your civilian job. Over a course of time, if you develop a good strategy, you'll make far more trading. And that's because of just how these patterns work, because of volatility. So you have to not worry about commissions so much. Yes, it sucks to lose. no one has ever liked losing, right? Losses are nice, right? Losses are nice, and I'll make another video on that later of why I say that. Losses are nice, but overall you want to try to win. Okay, you learn more off your losses than you do your wins. Losing, or sorry, success is a bad teacher. Losses are a good teacher. All right. So that's pretty much how much money you should start with. Don't start with a opinion account. If you do, you're gonna be stuck with Robinhood. And yeah, I don't recommend Robinhood unless you have a nice setup where you can have a tablet where you're putting all your executions, right? You're typing your executions on a tablet, and then on your screen you have a charting software such as Thinkorswim. Then that's not the best, but it's better. But still, I would not recommend you ever using Robinhood unless you have a stupid small account. At least you'll be able to get the emotion part of trading out of the way. But never use Robinhood. And don't start with a small account. So how do I find stocks? How do I find hot stocks? And like, for example, how did I find YUMA before it broke out? It's pretty simple. Actually, it's very simple. I've already put I don't have the video on this on my Daily Stock Fix YouTube channel anymore. It was on my previous channel. Maybe I'll upload it just for you guys. But you see this watch list here? It's a big watch list, right? Imagine if Tim Sykes was typing in this many stocks on his watch list. He typically types, I think at most 22, 20, like 20. Right here, we're looking at about 30. That is not the watch list that I'm constantly checking on, right? This is almost like the watch list that I'm gonna watch at the end of the week or something like that, or just casually, just to make sure I'm not missing anything moving. And basically, all these stocks include stocks that have previously ran, right? And what I'm doing is I'm keeping them on the watch list because maybe they'll run again, right? You can see all these guys are former runners, and they all have IPTI finally crashed. And they're all former runners. Here's another pump that was just added to this list. All huge percent gainers. And I have them here because I know that these guys can have multiple runs, right? Well, just because a stock runs once doesn't mean it's over, right? You need to keep these on your watch list for several weeks. And then when it looks like it's just boring as hell, volume has completely died out, then ignore it, right? And then when if it pops up on your scanners again, then you'll remember the ticker because you've seen it so many times on your watch list. And you'll be like, hey, I remember that. You quickly press it, and you'll be like, all right, I know my support and resistance. Hopefully you've kept your alerts like I do. I keep my alerts, and then at the end of the quarter, I purge them. So keep your alerts on there just in case something happens when you remove it off your watch list. It can still pop up in your alerts, right? So after you have this gigantic watch list of all the things that have ran in the last few weeks, maybe months, then you sort through it, right? You just click, and you look at patterns that are developing that you've already seen and that you've already tested and that you're comfortable with. Once you see these patterns, say for example like DVGD, then you add it onto a top stocks to watch list. And let me go into what that is. So like RLLG, first Green Day, watching it, right? This guy here was a breakout, watching it. 3 Green Days, watching it, watch, right? These are things that are hot, that I know are moving right now, and that have a lot of volume just recently, just a few days ago. YUMA, this thing's hot, of course, it's on the first red day, so we'll see if it can continue moving like POLM back a few months ago. We got DVGD, Pixie, EPTI, which is a pump looking for that first green day, and then ADAD, right? So these are my top stocks to watch, and it's nice because now you guys know my watch list. And this does not include pre-market gainers on Monday. But these are the ones that I'm no shit watching. These are the ones that I'm like, yeah, I'll look at them every now and then, and maybe if they start making moves, then I'll add them to the top stocks to watch. And that's how I keep track of them. So say, for example, YUMA, right? What a lot of people do, a lot of newbie traders, they see a spiker like this, right? And maybe they're not short biased, right? So they're not shorting because they're not comfortable with it. They're still starting off. They have a huge spiker, and then they see that first green day, and they remove it off their watch list. That's dumb. Don't do that. Keep it on your watch list, because after the first red day, maybe there's a second red day, and then after that there could be a first green day, and after the first green day maybe a second green day, a gap up, right? So and if you understand the framework, the penny stocking framework setup, then you understand this better. But you need to keep these on your watch list. Don't worry about the first red day. These things can move several times, especially if they're being promoted. So keep these on your watch list. Don't remove them for several weeks or months, right? Depending if the chart is, if it's holding its highs, say for example right here, it spikes and it's holding its highs, don't take this off your watch list. That'd be the dumbest thing ever, right? Because if it's holding its highs, shorts going to panic, they're going to cover the shorts, and then it squeezes, right? So keep this on your watch list. It will do you such good if you do this from now on. Keep a watch list like that. Yes, it's annoying, but it's easier than looking at your scanners all the time. Not only that, but I also have scanners, right? If I go to personal, you can see these 3 scanners. I have earnings winner scanners, like for example, CGI, it's moving in anticipation of earnings, what I assume, because earnings are not out yet. And we have this potential gap fill from 330s to the 380s, right? About 50 cents a share of potential profit there if it breaks out. However, I'm looking for a lot more volume. And then you also have to consider here earnings at 7:19, so we're about 4 days away. So we're looking at earnings around Thursday, Friday time. So this is, you can buy on the rumors, sell on the news. Just look at the news, and you can see if there's any rumors about the earnings. So this is one of the scanners. It's pretty nice because it does work for me. Near highs, where you can see BDSI is near highs. You can see here. It's telling me basically it's about to break out. I don't really find good stocks here, to be honest, but I have it as just in case because I've found some good setups off of near highs. And then we have the top percent gainers, right? Here you go. Here are every single gainer that is 10% or more on the day. And you can sort through them, right? I don't have them all included into my watch list because not every single one of them is part of my pattern. You know, maybe like for example, this thing here, there's a crap ton of resistance up here at the 11s. So I'm just looking at, you know, a $1.50 gain, and you know, if the best case scenario, no, that's why I don't include it. So I quickly scan through everything, you know, just type in things that I want to look at, and that's it, and I'm done. You know, maybe like for example, this guy here, I'm not gonna watch it, but maybe I want to include some others just in case it retraces back up and it breaks out because it's an OTC and probably a pump. But that's the way I keep track of this stuff, and it's off of the scanners and then add into the watch list and then keep track of them. So for example, like I said, where is it? So YUMA, when it's down here, well, all the newbie traders are getting rid of the stock as it's just like, you know, downwards because like, oh, it's so boring now. No, that don't do that, because then it has this big spike and you didn't have it in your watch list, and now you see it breaking out and you're trying to chase it up here. Even though I did the same thing, but I bought it on a dip, so don't give me too much shit for that. So that's how I, you know, keep track of these stocks. How does knowing about shorts help with buying? All right, short squeezes are a huge part of buying. Huge part. Say for example this guy. If you have watched not how to make millions, short stocking DVD, and also mostly trading tickers, you know that this is one of Tim G's favorite patterns. First red day, okay. First red day basically means it's a momentum shift. It doesn't matter if it's only gone up once or twice or 3 times or 4 days, right? The only thing that matters is that the stock is overextended, which went from 80 to 240. That is overextended. And then it finally had a first red day. People tend to short on this, right? Tim G may be trying to short at the top of this day, but then that, you know, opens up the potential move for a second short squeeze. And that's why, you know, there's always that second green day, because you have to see how confident short sellers are, and then if they're wrong, they have to buy the cover. But here, we have the first red day. Shorts are definitely crowding this thing here, especially when it retests the previous close here at 223s and it never really hits it. That's a perfect short. Shorts are definitely sizing in around the previous close. And they're short selling up here, and it comes all the way down. And, you know, it's first red day. Confirmed first red day. Then the second day. Second day, continuation, but it's a green day, right? It gapped up. Shorts don't like that. So they're going to start covering to take profits. This is a nice profit from the 220s to the 180s, 40 cents a share. You're talking about 20% profits in a day. So the next day, you know, they lose 5% of the profits. They're going to cover the short because 20% is pretty good for a day's work. Now you have the initial short sellers covering, right? Then the second day, we have, it doesn't gap up, doesn't gap down, right? So shorts are now saying, well, it's a third day. Buyings are likely going to happen on the third day, right? Because if you guys study, you guys know this already. On the third day, buyings are happening, and you know, it starts spiking and it breaks out past this high at 187. Potential buy right there, especially if it's the first pullback. Then it continues spiking. This is all potential profit all around here. Now you have to also have to consider the intraday chart, right? So look here, it comes down, it panics morning, spikes up. Short sellers are crowding this here, risking off the previous high. And it comes down, consolidates here, gaps down, but then it doesn't really hold that gap down the next day. It just moves sideways all day, but it has that spike in the morning, which shows potential that, hey, this thing can really spike. And it just goes sideways all day. Now it's just holding around this breakout level here at the 170s, right? So shorts are going to try to cover for profits. Let's go 5 minutes, 5 days. So now we have that morning spike here, and you can see right here has its first pullback, right? Has a first pullback, just a little consolidation around here. And it's just holding above these highs, right around here. One eye here, high, 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 and high. And then it just starts breaking out. You can buy right here, right? And then sell right before this top here. Make a nice 10% gain just in that little move. But then it continues going. And as soon as it breaks out, that's shorts covering there. Shorts are covering, and it just spikes, you know. But also because shorts understand, hey, this guy's just, you know, morning spiking like crazy, they're not going to try to cover up here. They're going to try to cover up here for profits, right? Shorts are not stupid, so they're going to cover. They're going to cover when they're wrong. I mean, they're stupid because they're wrong, but you just have to understand what they're trying to think. And if you know that, you know exactly what to look for in terms of buy signals. You buy on short squeezes. Shorts are trying to take profits here, so as soon as it makes a higher high, which here's a high, then it makes a higher high here, and it's making higher highs above this, they're covering their shorts right here. And if you know that, you can buy on this and ride the short squeeze. But as soon as it's up here and it's hitting the threes is a mental number, right? So shorts are going to try to short at 3. Don't try to buy on 3. It's up from the fucking 80s. Don't buy it. Like, I know so many of you guys, especially newbies, want to like, oh man, this thing's going to go to the moon. I can make them like quick 10%. It's not fucking worth it. Don't buy when it's up, you know, from the 80s to the 30s. That's up what? Like 300%. It's not worth it. Odds are against you at that point. If you want to buy, look for another short squeeze. If you're buying up here, nothing's being fucking short squeezed around here because they all covered on this spike here. Now, say like you can see here, it comes up and it squeezes a little bit from dumb shorts, you know, having weak hands, and it comes down. And it comes up, and we have a huge drop, and that's because shorts are short selling the higher low, and if you the lower high, and if you've seen Tim G's DVDs, you understand this. So then it crashes because people know, like, nah, this guy is a potential head and shoulders. We have shoulder here, head here, shoulder here, but Tim G identifies this as here's a high and then a lower high. He shorts onto this lower high, right? And you know, it's still going down, so it's a good short, really, really good short. But you have to understand, what if it starts flatlining right around here at the 240s, which it didn't. But what if it did? Shorts are going to try to cover, especially around the third day, because buy-ins are possibly going to happen. So this is just stuff you have to know. Like, and this is why you have to study so hard. This doesn't happen over, you know, after night. This isn't like a fucking college test. You're not just going to study for a fucking week on a subject and know it. That's not how it works. This is experience. You're going to learn after failure and failure and failure. And then, after so many fucking mistakes, then you're going to know exactly what not to do, and you're going to try to find the edge, right? And that's actually my next topic. What is market edge? Explain how the 230 rule is, and explain the 230 rule and how that is edge also, although it's close to midday, which is where my trade was. God help me. Tell me I could go there. Maybe not. Let's go to 2 day. All right, here we go. Good, good, good. So this stock here. All right, what is market edge? Let's see. If you're buying on the breakout of any stock, so if we go here, if you're buying on the breakout here at 235, what's your edge there? You don't have an edge, right? All you're doing is buying on that technical breakout. You're chasing just like every other buyer. Not that I'm not advocating that, but you have to realize you're part of the fucking bandwagon when you're doing that. And that is not somewhere you want to be as a trader. You want to be smarter than the crowd. You want to be smarter than the 90% that lose money. If you are chasing what 90% of people are doing, you are going to find the same results as the 90%, right? I know Tim G, he buys on the breakout, but he's done this so many times and he understands short squeezes so well that he only buys the setups that he is so confident that they're going to squeeze. This is one of those setups that would work because it's retraced all of this, it's done this huge U shape. But I would not be buying the breakout, and if I do, of course, I'm going to make my position small because it's just not something I want to be chasing because that's what it is. Especially, go back to that chart. Especially this huge retracement from the 170s to the 230s. That's a 60-cent retracement. Like that is huge. And if you're buying on that, you have to understand that this stock is up like 50%, and you're chasing a stock that is up 50% on the breakout. The only good thing is that one of my breakout strategies, and you could take note of this, I recommend it. You'll see that this happens a lot. If there is strong volume on a breakout, like say it is here we have 5 million shares, and then right before it breaks out, you see that it's at like 4.67. The likelihood that it's going to break out is very high because there is so much interest to buy the stock, right? So if you look for breakouts that have huge volume versus the previous high day that in which it's trying to break out, you'll find that your results will increase because of the volume. That just means there's a bigger audience. If we go back to the daily chart, you'll see what I mean by edge. So that buying on that breakout is not edge. That's you doing exactly what everyone else is trying to do, right? But this one here, you can see we have this morning spike and it consolidates around this whole fucking chop zone. So I told somebody they asked me how did you know to buy where you bought? Well, it's pretty simple. Just here's a breakout level. I'm buying it at 256s and the breakout level is at 235. So at worst, right, if I cut my losses at 235, say if I never fucking, what's it, 240. If I never risk off of this support here, I'm risking 20 cents a share, about 20 cents a share. Am I actually going to want to risk 20 cents a share? No, I don't want to risk 10% of my investment. So instead, I'll find the next dip. The next dip is around here. Yeah, you can argue it's there, but for the lesson, we'll just say it's here at 255. I bought at 265, right? Where is it? Right there. That's where I bought. Okay, and you guys can see my Instagram post, literally me being precise about this. It was an awesome trade, even though I barely made any money. So now that we have that, we can see that it's holding support here at the 255s, and it spiked up, and then the entire midday it's been holding that, right? If you guys follow me, I have constantly told you about that at the 10 o'clock, you have to look at the market. Why? Because for some fucking reason, I don't know, I'm not exactly sure if this is when the midday ends, but from what I've seen, from what I've studied, over looking at these charts over and over, at 10:15 to 10:30, there are big moves in stocks. I don't know why. Don't ask me, okay? But I just know this is the edge. The edge is to buy it before then, right? Especially if you have something holding intraday support. If you have a stock holding intraday support, you risk off support, right? Assuming that it's not, it's not huge. Me buying it at 65, risking down to 255, I am risking 10 cents a share. That's a 5% risk. That is pretty good for me, okay? I don't want to go any more than 10%, right? If I go over more than 10%, then I have a ridiculously small position. The 5%, that's doable for me. I can take that loss. So I buy there at 65, risk off here, you know. But not only that, you can see that there's this top right here. And you have to understand how short sellers think. So let's see, if I was a short seller, how would I be approaching this stock? And I'm sorry I have to retrace, but this is important. So let's go to YUMA. Let's go here. Let's go there. All right. So as a short seller, where would I be trying to short sell this if I wanted to short sell the front side of the move, which is fucking insane. But let's say, where would I want to do this? We have the morning spike here. Short sellers getting squeezed from the 240s on the breakout, right? So as a short seller, I'm trying to enter a position here. And what I'm looking for is for lower highs. Here, do we have lower highs? Yes, kind of. So imagine if short sellers are trying to short sell here. This thing's choppy as hell. I'd be panicking if I was a short seller here. But say I short sold here, right? Those few short sellers that decided to short sell here, they're down, and it's holding this support here. As soon as it starts spiking with large volume, you're out. And that's what this causes, this kind of run up, right? Buyers and short sellers buying the cover. And then we have this uptrend, and it comes down, then it pops, it tries to pop up, and it doesn't. It just continues to die down, and now we have that morning, that midday fade, right? So short sellers are crowding around this area here, right? And from the 290s to the 260s, you're talking about 30 cents. 30 cents off of a $2 stock is about 15%. That is a pretty damn good gain, right? As a short seller, buying on the first, short selling on the first day, on the first up day after the breakout, you're going to take any profits you can because it's not the backside of the move where you know it's going to go down. But when you have it holding support right here, God damn it. As a short seller, when you see it just going sideways here, yes, you want it to crack this 255 level. Once it cracks that 255 level, you're going to keep in. You're going to stay in the position because if it cracks 255, it can go down to 240s where the breakout was, right? Another 10 cents a share, another 5%. And if it cracks the 240s, it can go all the way down to the 2s or to the 180s, right? Because that's just how technical analysis works. And if you don't understand why that happens, is because if it cracks that, then come on, let me see this. If it cracks that, it goes down here at the 240s on the breakout, right? That breakout there. You can see it holding support there also because it's holding the breakout. It holds the breakout, and if it cracks that, it's going down to probably around here where there's support. You can see there's a lot of noise around here. And after that, it's coming down to the freaking 177s around this breakout here. See, and that's how you have to understand technical analysis. Whenever there's sideways price action, that's support. So as a short seller, going back to what I was saying, as a short seller, when you see a stock, come on, so much movement. When you see a stock moving sideways, right, and it's starting to gear up, I love this gearing up action. If you haven't seen textbook trading and you want to understand what gearing up is, this is what is his name? Guys from Investors Underground uses. It's gearing up action, right? We have this gearing up action and this this high here. One high, two highs, three highs. So it's tested that high 3 times. And now we have it gearing up. This is going to tell short sellers, I need to get out right now before this thing starts spiking on me. I need to take profits now before I take potentially a loss, because imagine if it spikes all the way to the 290s and it re-spikes up to this high here, they're breaking even. Short sellers want to take profits. That's the intent. You want to take profits off the market. So me buying it at the 265s is me knowing that, hey, short sellers going to cover because this is on a Thursday leading onto a Friday, right? It's a Thursday leading onto a Friday, so short sellers are not going to hold overnight because they're going to be afraid of getting short squeezed on a Friday. And I understand the 10, 15, 10, 30 rule. Basically, right after 10 o'clock, there are spikes. Why? I don't know. But I know it's something that happens. I know it's a phenomenon, so that's why I went in. I went in at 265. And the intention I said was I'm looking to make 20, 30 cents a share because I understand there's resistance up here at the 280s, 290s, even though I didn't sell up there. So let's see what happens. Spikes up, and as soon as it cracks that high, right here it hasn't cracked yet, right? But as soon as it cracks that high, you're gonna see this massive spike. Here are people buying in anticipation, right? There, that breakout there. Now we have a lot of volume. Once it breaks out past this high, that is that gearing action that I talked about in play. So we go here. Perfect gearing action, and it breaks on the previous high. Like I said, short sellers like holding on whenever a stock is making lower highs. And in this case, that trend stopped happening as soon as it broke past this high. Right here, it's making higher highs, and short sellers are going to cover. Not only are short sellers covered, but people like myself are buying because we understand that short sellers are covering, and we take advantage of that and make our quick 10% profit if possible, which I didn't do because I'm fucking stupid. And we have a nice squeeze all the way to the 290s high, right? Now, it just consolidated, hold above that breakout there. The intention was for it to hold, and over the course of the end of the day, it would continue spiking, but it didn't happen, and that's why I said I was too greedy. And it's just gearing all day, and then it crashes. Why? Because it was so weak. It was so weak trying to break out, right? We're looking for a confirmed breakout over this high, because then shorts are going to really know that this guy is really reversing. After this, it made a double top. This is a clear short. After that, you need to get out, which is what I did. But I was executed somewhere around the 268s because it was just pure panic. So this is, once again, how short sellers think on this side, and as a buyer, you need to try to find those reversals because short sellers are trying to cover. But market edge is you buying before any of this stuff happens. When you see something developing, you can buy beforehand, but make sure your risk is solid. If your risk is not solid, you're going to have bad trades. All right. My voice is starting to hurt. I was really passionate about this. I know I rambled off a couple of times, but there's a lot of important sections here, and I hope it helps you out in some way, shape, or form, because you need to understand these topics like the back of your hand. Otherwise, you will find so much frustration in this game. So, aside from that, this is Michael with Daily Stock Fix. Until next time, you'll have a good day and weekend. Peace.